this has happened only twice in last 40 years or 4 decades, that the stock market has gone up more than 20% 2 consecutive years. And this is what's going to look like gonna happen this year as well. So last 2 years we have seen big growth of SPY, and part of that being it was undervalued in the year 2022 when the businesses were doing well. They cut the losses, they were protecting their businesses and increasing their cash flow, especially technology related businesses, which is heavy in SPY, VOO, or any other S&P 500 index ETF. And recently, what we have seen is an immersion and an explosion of growth in those businesses with their free cash flow growing out of the roof. The only thing stopping them right now is the investments in AI, meaning the data centers, the electricity costs, the powerhouses that they are building, the nuclear plant that Facebook or Meta is going to build to power their generative AI systems is all where the cost is for those businesses. Otherwise, they have extremely high free cash flow compared to any other traditional business. So, we have seen these numbers, and I'm not sure how long it's gonna carry like this. But if you look at the numbers of 2022, the stock market at one point, SPY, which currently is at 576, was at $360. That's like 75% discount from today's price. So I do not see a correction happening this deep in recent time, but I have mentioned in last of my two videos, which you can see or link in the description I'll provide, in which I've mentioned that these levels that we're talking about are gonna get corrected, if not the end of this year, by the next year, if not next year, by the next to next year. So these corrections are bound to happen, and they are supposed to happen because current SPY PE ratio currently is at 29, which basically means that price to earning ratio is high for almost all of the stocks in S&P 500. Of course, there are a few outliers like Nvidia and some other businesses, and AMD and other businesses, multi-billion dollars companies which are selling for extremely high valuation. Then there are some businesses which are still a buy as of now at looking at these levels. But overall, if you look at the actual price to earnings ratio, it is towards the higher end. Basically, PE ratio roughly hovers around 25 for the last 30 years, and that's the average of PE of SPY. But currently it is at 27 or 28, meaning it is little overpriced. So definitely there is a correction that is bound to happen really soon. But when and in which sector specifically, we don't know. And that is why I keep investing in SPY and ETFs like QQQ, and I have built up this portfolio by selling options as well. So I have sold these 7 contracts of SOXL and was able to generate $1.45 per contract for these 7 contracts, and now they are worth 41 cents per contract. So if I were to close these, I will be in positive $728, and I'll get that money back of the one that I have tied with SOXL 7 contract. So I'll get that money back. So point being, I am trying to play little conservative here, meaning I'm trying to sell cash secured puts on the ETFs that I want to hold at the lower price than current price. So if you look at the XOXL price today, if I were to sell a put option for 10 days out, what I'm looking at is the implied volatility will always be really high for this. But at $27 a strike price, I'm looking at zero point 0.2 delta, which means that there are only 20% chances of this to get executed or get called, which is $27 price, which will be a decrease of 4 to 5% from the current values. But that is how I see it, and I'll be able to generate 72 cents per share or $72 per contract if you look at the contract value. And selling seven contracts again and making, 72 or maybe $73 per contract, you'll be able to generate $510 for just 10 days. And then again, like this is out of the money, meaning it is highly unlikely, or there are 80% chance that you will not get the price of the stock or this ETF is not going to get down to $27 anytime soon, or at least on the day of expiration. So that's how I'm playing this current stock market. And one more thing I wanted to mention is fear to greed index. So CNN Business has put this together. I don't know if you trust CNN from the news that they have been giving out, but this fear to greed index is pretty accurate is how I see it. Because whenever I see there is fear or extreme fear in the stock market, what happens next is that investors start investing, and they basically find the market to be cheap, and that's why they start buying more and the stock market goes up. And when this hits greed, basically everything is going up and up and up, then you will see if this fear to greed index will go beyond 50 or beyond the neutral levels in greed. So then at that time, you will see there is a pullback, or people or the investors will start selling at some point in that time. So that's how I see the market. I get really tentative and I put a lot more attention when this gauge goes in greed or extreme greed levels. But at the same time, I don't want to miss out on any opportunities that currently market has to offer, and that is why I keep invested. And then I invest on daily basis. I'm investing $110 in SPY to build up this, and lucky for me, I have a good job that pays for this kind of investment every single business day. I'm investing $110. So that's how I am building my position in SPY and QQQ. And that's what the plan is long term. I do want to make passive income from selling options and getting premiums. But at the same time, I want to have core positions in SPY and QQQ for a long lasting effect. And these are the two ETFs that I mostly trusted, apart from the SCHD, which is my dividend play. But yeah, that's about it. I hope you guys will like this video. Thank you guys for watching. If you haven't already subscribed to my channel, please make sure to do so. And I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.